All right. Welcome, everyone. This is Tosif again from MTR Groups. We have decided to explain basic finance concepts in small chunk videos to make things easy for everyone. And we have made this series as Finance Made Easy. So we're going to be discussing small bit-sized topics in a very simplistic way for everyone to follow through. And we're going to be continuing these as you guys ask us to. So this is going to be our first step and first episode. This is going to be our first episode to discuss one of the very interesting topic. One of my friends actually asked me about profit first system. As a matter of fact, that's why you see the title of this video is your accounting system costing you profit. So we're going to be discussing in a very few basic steps what it is and what to consider, how to actually manage the profit first system. So if I go into the whiteboard real quick, one of the books that I recommend is Mike Michalowicz, The Profit First System. He explains it in a very good way. I personally feel that way of explaining things is significantly better than just pointing out with textbooks. So if there is anyone out there interested into more of this profit first system, definitely recommend reading that out. So on a very high level, what it means is whenever some income comes in, all of your income in terms of the sale, whatever service you do, everything comes in as income. So this is your primary business account that you typically have for most of your business operations. And this is the account that you're going to be having for billing clients and even in some cases credits as well. So from here, what profit first system, as the name suggests, says that the first distribution goes to the profit. And the way these four can have multiple buckets, or in realistic terms, having multiple bank accounts. And when you do those multiple bank accounts, what you do is you allocate the amount even before spending it, which allows you to budget and stick to it very rigidly. And what it does in turns is ensure your profitability of the business. So if you're struggling to say that, hey, I'm working hard, this has been a situation for multiple friends of ours, clients, and to be honest, in some cases, even ourselves. When I first started business, I was like, hey, we're making so much money, but why is there nothing to take for ourselves? So this is the party money, or whatever you want to take, whatever you want to do, or if you want to put any kind of cushion. So whatever income comes in, instead of waiting for the year to have some profit first system dictates is you allocate that amount to profits in the first place. The second one goes to the owner's compensation. So it typically is the one that you pay bills with. As an owner, business operator, this is the budget that comes down to your own personal expenses, like your home, your utility bills, or anything that you need in the basics. The third major thing that does go through is operational expenses, which is OPEX. And what it does is you have your inventory from here, you have your salaries that you give out to your employees or have anyone else. If you have to pay someone, or if you have to keep the business garage, if you're having those bills, business utilities, everything goes from OPEX. And of course, Uncle Sam coming in, the final cut does have to come to taxes. You need to consider that depending on the structure your business is, if you are a C Corp, you are going to be taxed 21% here, and whatever the amount of income percentage you're at, income bracket here. But if you are not a C Corp, if you're a flow-through entity, you need to consider that the total amount here is something that you need to consider the taxes of. And in US code, you have to pay quarterly taxes if you owe them. If you don't owe them, that's fine. But if you do owe them and if you don't pay quarterly taxes, what's going to happen is it's going to accrue interest. So make sure to keep taxes aside every time you make something, any money out of your business. And as long as it's more than your operating expenses or any other necessary and ordinary expenses, make sure to pay them in the Department of Treasury website. If you're not sure, I recommend just going out and making some estimated tax payments. Now, to consider that, what are the fundamental principles to make it happen? There are essentially 4 steps. First of all, when you're going to be taking money out in the first stage as the profit, you have to reduce your expenses. There's no other way. So what you need to start thinking, this is why this kind of system is so powerful sometimes, is it makes you think, how creatively can we reduce expenses? How can we do the same thing at a third of our expenses? So that's why you try to allocate whatever percentage. Say, for example, just for the sake of our conversation, we said 2%. Now you need to actively think, how can you reduce your operational expense by at least 2%? And when you start doing that, you start focusing on creative ways from yourselves to reduce that. So that's the first principle that you need to consider. The second principle is to understand what expenses are more prioritized. So you need to prioritize your expenses and spend on things that matter most first. So you need to categorize your expenses that, hey, what is ordinary and necessary? What is ordinary, but what is needed and urgent? Important and urgent. There's a very interesting book, 7 Habits of Highly Effective People. I recommend that book as well, where there's an effectiveness chart. I'm trying to have that same concept into finances, as what is important and urgent. You have to take care of those. Important but not urgent. You have to focus on those. Not important but urgent. There is going to be something that you just have to take care of, like you end up having a traffic ticket. Unfortunately, that's not the best thing to occur, but you have to take care of it. The last one is not important, not urgent. What it means is, in any business, you will find things that we are spending for nothing. So if you do recognize, go through your expenses, you will find some expenses that is not always needed. You can actually get rid of some subscription, Netflix, Hulu, get rid of those. And when you reduce those, you end up having to take that money to the profit. Now, the next step is going to be to remove your temptation, which is going to be delayed gratification. So when you're taking those Netflix money out, your useless or harmful food money, if someone smokes, someone drinks, you take those money out and stop those bad habits and have a bigger delayed gratification by reducing or controlling your temptation. So what you end up doing is maybe take a vacation. That's where this profit money is going to come from. And the final thing is going to be to start doing this on a rhythm. When you do this on a systematic basis, it ends up in a situation where things become a habit. And when you have those habits, it's significantly easier to take control of your money, as opposed to just randomly hoping at the end of the year you're going to end up with some level of profits. And for some actionable steps today, we can take care of some very basic things. Is, of course, the first thing is we need to create separate accounts for each of these. So at least 5 accounts, 1, 2, 3, 4, 5. Have these 5 accounts ready. What it does is whenever you deal with all the external elements, all the receivables into income, and you spend only from your OPEX, and you run your payroll from your compensation. And of course, even if you're not employees, not non-owner employees, you run them from your OPEX as well. And definitely have a separate one in profit. I know most banks does have this feature that you can have multiple accounts, up to 10 for free in some cases. So definitely look into those. The second one is plan your allocation. So even if you're feeling like, hey, I don't know how much you're going to be making a profit and hoping to have a profit, even as small as 2% or 1%, and make sure to have the proper allocation for your operational expenses. Of course, you need to realize that, hey, these are my operational expenses, and whatever you do in this system, you have to allocate the first chunk for your profits. And of course, same thing for your compensation. Proper allocation. And of course, as you grow your business, understand what your target allocation is. Like, you want to at some point operate at 30% profit margins, which is great. So understand that you have to write down your goals, and we need to start taking actionable steps. Then your next step is going to be to every 1st or 15th of the month, you transfer funds from your income to all of these accounts for the expense of the following month. And every month or every certain amount of period, like every quarter or every 6 months, you sit down, you adjust your allocation, you properly set up your systems. What you do is you grow your compensation and profit and subsequently your taxes by 1%. So that there's a very interesting book that speaks about atomic habits, where it speaks about terminal, very small amount of regular incremental growth, which contributes to a bigger and more collective success in the future. And the last thing is, whenever towards the end of the 6 months period, whenever we're adjusting that, we take money of the profit account and the tax account out. Of course, in most cases, you're probably going to make this tax account paid to the Department of Treasury. So make that payment so that you're not charged interest. And you just take this profit out of your bank accounts that is connected to the main income. So that's how the fundamental basics it is of profit first system. If you have any questions, feel free to drop your comments below or questions below, and we will be working on answering those questions. If this is your first time, make sure to subscribe, hit the notification bell, and give us a like. That always helps. And with that, we will see you on the next step. And for now, have a wonderful rest of the night. Thank you very much.